Welcome to Friday Takeaway. President Trump bombed ISIS strongholds in Afghanistan, saying this mother of all bombs showed his seriousness in fighting ISIS by denying them operational space. And in top company news, the 142-year-old Japanese conglomerate Toshiba warned it might not survive thanks to a disastrous and expensive foray into nuclear power. Back home, Malaysia hogged the headlines for the wrong reasons, with some 26 billion ringgit in government bonds sold off so far this year. Much was also made this week over fresh research which shows that nearly 8 out of 10 Malaysians can't even raise funds, even 1,000 ringgit, for emergency needs. And some news flow on 1MDB. Remember them? Tenaga Nasional agreed to buy power from former 1MDB unit Edra Power, which is building a 2,242 megawatt plant in Olah Gajah, Melaka. 1MDB itself reported the completion of the sale of Edra to China General Nuclear Power Corp, for which it received 9.8 billion ringgit in cold, hard cash. Oh, and one more thing. The ringgit fought back to 4.41 to the dollar thanks to President Trump's statement that the greenback is getting too strong, especially with other countries devaluing their currencies. A quick look now at the CI. As at 10 a.m, the index is down 0.3% to 1,732 points, lower by 0.5% from last Friday's closing. Year to date, however, the CI is up 5.5%. Next up, some big weekly movers. This little company called EITA Resources, market cap 260 million ringgit, which is rising in a major way. While they were listed in 2012, they make, sell and service elevators and escalators and enjoy a 10% local market share. EITA are considered the top local lift player after securing the MRT job, which should open more doors literally in the MRT2 and LRT3 projects, both of which are expected to be awarded in the next few quarters. Well, earnings from MRT won't come in until it's completed in the middle of this year, and there's no guarantee that they'll also get the MRT2 elevator job. And there's also a small chance that export sales might weaken. CIMB reckons EITA are an ad with a target price of 2 ringgit 40 cents, and right now they're trading at 1.98. This week alone though, EITA are up a massive 18%, and volume yesterday spiked to over 6 million shares traded. Here's another big mover, HCK Capital. Originally listed on Bursa in 2000 as an industrial engineering and rubber trading company, today's HCK has interest in property development, F&B, IT and media, including the Edge Weekly rival Focus Malaysia. From closing at just 4.03 last Friday, they've sprinted away to 5.73. That's a 44% gain in just a week. No wonder they got a love letter from Bursa Malaysia asking to explain these gains. In response to Bursa's UMA, HCK said that while it was unaware of the reasons behind the surge, it has previously announced a 145 share split and an issue of 211 million new warrants on the basis of 1 warrant for every 2 split shares held. Risks? Well, the regulators have yet to approve these proposals, while HCK's 2 core businesses of media and property are currently going through challenging times. You can see that by the 84% drop in 2016 net profit and 38% fall in revenue. Well, none, since the street have yet to officially discover HCK and cover the stock.